profit before tax is there. Mayuresh Joshi is also now joining us. Mayuresh, one word on Bharti Airtel. What's your view? If I take a look, it's a profit this time versus a loss expectation. Net profit again basically has come roughly around 86 crores. Loss was expected of 700 crores. So once again, Airtel has managed to stitch a profit versus loss expectation. What would be your verdict?
Well, they've managed to do that, Piyush. And you're absolutely right. I think in terms of the lower recharge customers actually getting weeded out has got reflected on their overall subscriber base and the SMS share that they're carrying into the market. The margins, again, I think on the Indian domestic wireless front was expected to be down because the networking charges were expected to move higher. And even the revenue on the Indian domestic wireless operations was supposed to be lower because of lower IUC charges. The African business has held up pretty well, and that has supported the overall EBITDA margins. But yes, I think you need to have those certain adjustments done, and then that's the reason I think the performance more or less in line with what the street was expecting, at least on the operating front.
Mayuresh, just one word on the India wireless operations. While we were just talking about Africa, and Africa again actually has delivered nicely. Good growth also, subscribers also actually, there has been some stable performance. But when you look at the India wireless business, the metrics actually, I'm just quoting the metrics here. Profit before tax is roughly 1214 crores of loss here. So you're talking about a profit before tax is actually a loss of 1214 crores as a sort of overall numbers here. On a net profit side, again, I'm talking about the consolidated numbers here, it's 86 crores. So there is a large tax refund contribution also here. EBITDA largely in line, revenue largely in line, margins almost in line with what the street was working with. So on this sort of metrics, if I just exclude the tax refunds, what is the sort of concern you will be having at present on the business, especially with the fact that subscribers, again, we're not seeing any massive again subscriber accretion here. Would you be sort of skeptical, or you will still be hopeful in terms of ARPU uptrend?
So the patchiness will continue. Now, if you bifurcate further, Piyush, in terms of the granularity of numbers, specifically for the Indian operations, as you are mentioning, I mean, if you bifurcate that further into B2C services, the home service and the digital services and the B2B services, what you're probably looking at the mobile services on the EBIT front, you're absolutely right. So when you're talking even on a year-on-year comparison, I think the EBITDA compared to total revenues has come off drastically, and that's why you're facing the challenges on the EBIT front. What has probably held out for them are still the digital TV services at this point of time, the home services as well as the B2B revenues. But what probably happens even on these counts is going to be the strategy that their competitors are going to devise. So again, the operating performance over the next few quarters will be very, very interesting to watch. And that's the entire premise. I think the wireless business in India is clearly...
Mayuresh, give me a minute. I'm giving you more details so that we can have another look here. On a sort of EBIT basis again, I'm just looking at the segment numbers here. The India wireless business operating profit, and I should say operating loss in fact, versus the last quarter has widened now. So we are talking about 1592 crores of loss last quarter. This quarter, the loss is 1900 crores here. So the loss has widened by roughly about 400 crores for the India wireless business, operating loss. Africa operating profit almost largely remains flat. So again, there is no major concern, no major improvement. Largely again remains same. When you're talking about South Asia, largely the losses remain the same. If you're talking about the sort of tower business, we know the numbers again, so no major surprise there. Home services business, again that's related to broadband also, that is under pressure. From almost 108 crores of operating profit number here, you actually are talking about now the number has slipped to 73 crores. So there is a 30% reduction in the home broadband operating profit. Digital TV business, you're talking about 190 crores profit last time. This time it's 157 crores. So again, you actually are seeing a pressure, and that pressure is roughly 16% decline quarter on quarter in the operating profit there. So broadband, digital TV are under pressure. India wireless losses are widening. Africa, South Asia remains flat. Tower was already predicted, again it's a listed company. So Mayuresh, what's the word now? Now we have more granular detail from the details here. Very clearly, the India units, whether it's broadband, it's digital TV or it's wireless mobile, those actually are showing signs of crack and actually are showing some pressure points.
Absolutely, Piyush, and that's what I was mentioning. I was going through the press release by the time you're saying that, and that's what I was just alluding to a minute ago. I think when you're looking at the mobile services on the Indian business, on the wireless business, the EBITDA per total revenues, as I mentioned earlier, have come off drastically. So if you talk about 32.6% reported in December 2017, that's almost 19% in December 2018, and that's clearly reflected in terms of the negative EBIT performance. And it has been very, very patchy, and that's the entire premise. What they probably do in terms of how competition stacks up, specifically in terms of the broadband business, can further pull down the kind of ARPUs that they probably make and the cash flows that they probably generate, either in their homes business, the digital business as well, and even on the B2B services, I think. So they need to be probably hyper competitive in terms of pricing at this point of time. You're absolutely correct. I think the expectations in terms of patchiness for South Asia, for the tower infrastructure services, is probably constant at this point of time. Africa has held up for them. So I think Africa probably is the knight in shining armor for Bharti at this point of time. And again, I think the capex requirements, so when I'm looking at the other press release that they've probably done, the total capex here today stands at 22,500 odd crores. So I think the capex requirements are going to be on the elevated level. So I think that puts further pressure on the cash flows. The only respite, as I'm seeing through the ticker on the TVCs right now, is that the ARPU has probably moved up in line with expectations. So I think management commentary is going to be essential, but I think what you're probably looking in terms of data granularity, I think the softness is continuing on the numbers, specifically on India wireless business.
Marish, the most important question I should be asking now is, I was just looking at the subscriber numbers as I went into details inside. ARPU number you just talked about, again, largely in line with expectations. Minimum recharge plan was being implemented, so ARPU had to go up. But subscribers, again, what's the take on subscribers? Churn rate 7%, a jump from 4% last quarter. This is the result of implementation of minimum recharge plan. I'm just thinking what's going to happen with Vodafone Idea now. But on a subscriber basis, yeah, it's an exodus of 4 crore subscribers. Yes, 4.8 crore subscribers have exited the network. And you're talking about from 33 crore subscribers last time. This quarter, it's about 28 crore subscribers. Churn is 7%. Yes, those couple of them were dormant subscribers, were not paying subscribers, and those actually have exited network now. But Marish, how actually should the market be viewing this? Is this churn rate going to come down next quarter, or there is going to be some more concerns in the context of the sort of subscribers getting adjusted now, they have to pay every month, when this trend should be getting stabilized?
So I hope that this quarter and the next, I think they should be able to do that. And you're absolutely right, I think, because they didn't want these lower recharge subscribers, because they were obviously creating a drag on their ARPUs. The monthly churn has gone up from 4.1 to 7.3. But it is also getting reflected in ARPUs moving higher. So I think any plans in terms of competition actually moving up their value packs or the bundled packs as we call it, I think there should be some amount of respite, at least in terms of down trading. So at least the ARPU should get protected. Now what happens in terms of them regaining the RMS share? So I think the revenue market share is extremely critical in this point of time, along with the SMS share. So I think the SMS share, which has got weeded out very categorically, both by Bharti and Idea Vodafone as well, I think that will probably reflect on the numbers. But it will also reflect in better ARPUs, in my opinion. So again, I think ARPUs should stabilize around this number as a base if one really expects and assumes that the lower recharge customers are probably out of the system. And that again should give them a reasonable amount of confidence to probably say that if they start increasing and contain the churn ratio going forward, I think they've got a reasonable amount of subscriber base along with expectations of prices actually moving a tad bit higher, which can also support the pricing. But I think there are a lot of ifs and buts out here, Piyush.
So Marish, last quick word, verdict on the stock, how that should be shaping up. And I know it's a budget event, so that's another sort of way, but still, on a stock, how that should be shaping up?
So I think the street will largely look out for the macro development surrounding this sector at this point of time. What the competitors do in terms of pricing will largely determine the overall performance, specifically in terms of how data plans and the bundled packs will get priced. The second element, obviously, as I was mentioning, is going to be the capex element. So the capex element is expected to still remain on elevated levels, which basically means that the kind of cash flows that one really looks at, and I was going through the cash flow sheet as well for the Indian operations in general, I think significant improvement has to come through, but again, I think there will be a lot of patchiness on that front. And the third element obviously is the overall landscape that the management probably sees. What probably happens in terms of deleveraging their balance sheet and what kind of steps are taken, because even that is going to get critical from a bottom line perspective. So I think all these things is something that one should ideally look out for, both in a transcript and the management call as well.
Right, Mayuresh, as always, thanks a lot for joining on the show and giving us your insights on Bharti Airtel results very clearly, as Mayuresh was talking about. The pickup in churn, the mass exodus of customers. Yes, ARPU perhaps could be a sort of optical positive at present, but beneath the numbers again, still showing some pressure. So perhaps that's the sort of a mixed bag Airtel results are showing. But that brings us, that's a wrap on this special coverage of Airtel results. We're going to take a break, but stay